Hey all, welcome to ShareTrek. This is Raj here. I find great joy in making videos for our channel and to try to keep a narrow focus on what you, the audience, is looking for. This means that the contents would be around genomics and disease verticals covered by genomic research. This also means macroeconomics and technical analysis of indices. In this channel, this seemingly narrow focus has mushroomed into two distinct wide audiences. The original audience that is fully focused on genomic stocks and technical analysis, as well as company-specific content. The other major audience is for HIV therapy update. This audience is from across the globe and divided into three major language groups: English, Hindi, and Spanish. This is why our channel has Friday content focused on HIV, and I have been able to do English and Hindi. I've still not been able to get Spanish translations, but YouTube auto translation does the job. Until I get something in place. Rest of the weekdays, we focus on genomics as we did before. Saturdays include a technical analysis of the indices and genomic stocks. However, every channel has to refresh contents every once in a while. If you recollect, we used to have what was called as daily update, and then it became morning show. We have abandoned those formats and we are doing something different altogether at this point of time. The current format will also change as you, the audience, show your preference. I know your preference when I see the number of views of any videos. If you don't view a particular video as much as the other videos, I can understand that you don't have much interest in those areas. And I would drop those topics and do more contents on the area where you're watching more of the videos. That's how the content of this channel keeps changing. So if you want to let me know of your particular programming preference that you like, please comment and watch those videos that you like, and I'll get the message. Friends, we are now at around 1,970 subscribers at the time of recording this video, and soon we will have the live stream event to pick the winner of my acrylic on canvas painting. It's the painting of a horse, as you can see here. If you have not yet put your name in the raffle, please do so by clicking the link in the description of this video and entering your name into it. Do you know something? Our stats indicate that only 35% of our viewers have subscribed. I request that the rest of the 65% to please subscribe to improve the stature of our channel, because if we have more subscribers, our channel would look much better, and it would enable me to get much better guests. I mean, great scientists and doctors who work in the field of CRISPR and HIV or sickle cell disease. Imagine what great content we would have if our subscription numbers are increased. Subscription is absolutely free. So please pause the video right now, scroll down, subscribe, and then come back and resume this video. I'm not going anywhere. I'm waiting for you. Just do that right now. Subscribe. Okay, so let's get started. Welcome back, friends. So the first thing I would like to talk about is the fact that the U.S. Bureau of Labor and Statistics is planning to change the way it calculates CPI. Let me quickly take you into their website and read the press release. And then we'll also look at the CPI graph for the last many years and see how this is going to impact the CPI reading for February. Well, here is the press release. It says January 2023 CPI weight update. Starting with January 2023, the BLS plans to update weights annually for the consumer price index based on a single calendar year of data using consumer expenditure data from 2021. This reflects a change from prior practice of updating weights biannually using 2 years of expenditure data. So if we go to the graph here, which shows every year what is the inflation rate, and if you look at the graph, you'll see that 2020 starts from here. Let us say where 2020 starts. 2020 starts from here. It dropped from 2.5% all the way down to 0.1%, and then picked up to somewhere around 1.4%. So that's where it ended in December 2020. And then in January 2020, it started picking up, and in 2021, it started picking up, and it went all the way up to 7.0%. So If we followed the original methodology, then our average inflation for comparison by taking the average of the 2 years would be lower. But now, because we have removed 2020 from the equation, our inflation comparison for the previous year is going to be much higher than it was before. And therefore, when you look at the current inflation reading of 6.5%, it's going to look much more benign. So this is a kind of smoke and mirrors, in my opinion, and this is going to make the CPI look much better. Then the question would be, what would happen if the Fed is going to look at CPI data as one of the main data points that it uses to set the inflation, to set the interest rates. So we'll have a situation where we have a reasonably tight labor market and we have falling inflation thanks to the change in the base with which we are comparing current year. So if we had the comparison of 2020 plus 2021, the inflation rate that we are comparing with would have been lower. So our current inflation rate would have seemed relatively higher. But because we are taking only 2021, it's going to look much higher than it would have otherwise. So our comparison is going to be much more favorable, and the inflation rate would seem to be dropping much faster than before when we compare it to 2021. So that's my take after looking at this press release. I read it twice, and this is what it's planning to do. So then the question is, what is the Fed going to do? Is it going to start being very bearish in terms of, dovish in terms of interest rates, and therefore the stock market will start going up? Is it going to start lose money policy? Does calling an elephant a cat make it a cat? That's the kind of question we are looking at. So friends, as small retail investors, I think that we do not have much control in the playing field. Because the playing field, I believe, is totally rigged, and the big guys can change the rules of the game anytime to suit their near-term objectives. So, what does a retail investor do in front of Jedi mind tricks like this? I think that the only thing we can do is to buy low and hold for a long period of time, because all these short-term moves and all work out over a long period of time. That's why I think Warren Buffett's maxim of buy low, buy a good company, buy a business that you understand, buy a business that make things that are useful, and then hold on to it for the long term and prosper. So buy, hold, and prosper. I think Warren Buffett was right. And all these things that we try to do technical analysis and use options and shorts and other things, I don't know how much it makes sense for the retail investors. Maybe it helps the big investors, but that's my take on the whole thing. Because if you take the bigger data points, right? If you look objectively at the bigger data points that are there, it's very clear that while productivity of the worker has increased because companies are making huge profits, the wages have not increased in real terms. Inflation has made sure that the wages do not retain purchasing power. So even if someone got 5% increment last year inflation was around 8%. So they actually lost 3% of their earning capacity. So the company is paying less wages and the employee is becoming poorer. 3 big companies have laid off workers recently. Microsoft let go of 10,000 workers, while Amazon let go of 18,000, and Alphabet let go of 12,000. And I'm a fan of these companies. I have stocks of these companies in my portfolio, and I believe that they will give me good returns. If you want to put a positive business spin on this layoffs, then you could say that the management is very dynamic and forward-looking and has proactively cut costs in response to difficult economic conditions. If you look at it another way, as the common man is judged when they fall out into unemployment or if they become homeless, then you can say that what kind of a pathetic business cannot make profit even after cutting real wages, that it has to let go of so many people? Is that a good business model? So the problem is not with the companies or the business models. The problem is with the terms of engagement between company shareholders, and government. In good times, company use the extra cash to buy bank shares and increase share price, and CEO remuneration is maximized, and shareholders' wealth is maximized, and the income disparity becomes higher. But when bad time comes, these same companies dump massive employees and get a bailout from government because unemployment is a hot potato. Politicians will lose their votes, and therefore they would rather give sops to these companies to prop them up and make them employ more employees. And that's the reason you'll find easy money policies coming around the pike. You'll find airlines and banks in this particular category. When the GFC happened, the refrain was that too big to fail, banks are too big to fail. And the time when during COVID, the common man was given money, it was considered to be socialism or communism, and it was considered to be very bad. So it's all a question of terms of engagement that we have in the society. And I think right now, the political churn that is happening in the United States and other advanced economies is a symptom of the people playing out this conflict. And either we're going to end up with autocracy and oligarchy, or we are going to end up with democracy, which is more tinged with socialism, which tries to take a bottoms-up approach rather than the trickle-down approach that has been taken so far. That's my read of what's happening overall. I would be interested to understand from you what you think is actually happening. Do you subscribe with what I'm thinking? If you have your own opinions, please put it in the comments below so that I can get educated on that. That said, let's look at the indices and the genomic stocks and see what the next week looks like. Here we are in our TradingView platform, and you can see that we have NASDAQ futures looking good. They are reading 2.82 at this point of time, positive. And we still have a big bearish channel in which we are going. The question is, are we going to be able to break through above this? And we also have resistance out here. We are exactly at the resistance of 11,665.00. And that resistance has checked us. Is it going to push us down on Monday? That's the big question. MACD is still bullish and momentum is still above average. So the chances are that we are going to push upward of this, and then maybe we'll encounter the challenge of this resistance line for the bear channel. Now, if you look at our indicators, you can look at US oil. US oil has already broken past, and I'm looking at US oil forming some kind of a bull channel out here. And the next resistance it has is at 86.33. And we have a bullish MACD, and the RSI has got plenty of room to run. If you look at QQQ again is facing this diagonal line of resistance. We have to see whether it's able to break through with that. And right now, the MACD is looking great, and the momentum is also pretty good with plenty of room for the RSI to run through. S&P 500 is staring at the diagonal line of resistance from the long-term bull channel. So we'll have to wait and watch what happens on Monday. MACD is looking good, and momentum is also looking pretty good. But the key test is whether we have enough strength to cross this. Russell's is up 1.65%, and we are having the resistance out here, which is a minor resistance, which happens to be at 189.01. And our MACD is bullish, and momentum is also pretty good. It's above average and plenty of room to run. Dow Jones Industrial Average is looking weak to me on the charts because MACD is bearish and momentum is below average. And it has still got support from this line of support, which was previously a line of resistance for the earlier bear channel. If I look at VIX, VIX is looking up. I think VIX is still healthy, but it has got a diagonal line of resistance out here, which is ready to check it. And the diagonal line of resistance for Monday is going to be at 21.12. And anytime we go above 20, I don't think it's a good situation for the indices. So we'll have to wait and see what happens. Right now, MACD looks benign. It's looking bearish, and we have got momentum, which is below average. So I'm all in favor of the VIX falling further and trying to touch the support, which is at 18.57. Let me mark this support green so that we know that it's a support. So that's what I have here. Now let's go and look at the index influencers. If you look at the index movers, we are looking at Microsoft out here. Microsoft is looking good. MACD is positive. It's bullish. Momentum is also above average. And we have created a new line of support out here at 238.81. So Microsoft seems to be able to help the index move up. Apple is looking great. MACD is bullish, and momentum is also above average. And we have created new support at 137.41. So Apple is also saying that, yeah, I'm going to support the index. Amazon is looking great. And whenever there's news that companies are laying off employees, then immediately the shareholder thinks that it's going to add to the bottom line by reducing salary expenses, which are a big item in the balance sheet. Sorry, in the profit and loss account, and therefore I'm expecting all of these stocks to jump tomorrow. On Monday. Google is also looking great. It's converted the support of 95.74, which was earlier a resistance. But the only thing I'm concerned about is that it has been a disorderly jump. So these are something that I don't like, because it has to come down to cover it before going up again. That's what the theory says. And also we have a bad signal out here. Very, very small gap for RSI before it becomes overheated. So I'll watch Google a bit carefully. But the other three are all go. So I think Monday is going to be pretty positive. And if you look at crypto, Bitcoin, where is Bitcoin USD? BTC USD is doing very well. It's gone up further, and it has converted our resistance, minor resistance, into a support. And its next resistance is going to be at 24,238.0. So that's what Bitcoin is looking like, and it's overheated, so it's going to cool off a little bit. It's gone above, the RSI has gone above 70%. MACD is very bullish, so I'm expecting a bit of cool off or a sideways movement for the RSI to cool off before it goes up further. So that's what I'm thinking out here. But I wouldn't be surprised if Bitcoin continues moving upwards and only to be pushed down by the resistance out here. Let's look at the Genomics shares. Just going to sort it out so that we have the winners from Friday on the top. So we have Invite, which was up 5.37%. It's forming a cup and handle pattern, so I'm very bullish on this. So this resistance is going to push us down. But if we were able to move up, then I think we'll have started the handle portion of the cup and handle, and we'll be on track for 3.29, which is the target price for this cup and handle pattern. If you look at Beam was up 5.02%. MACD is bullish. Momentum is also above average. So I'm thinking that Beam will also move up on Monday. Let's look at Bluebird. Bluebird is looking very tricky on the charts. It's looking very weak to me because momentum is very weak, and MACD is also bearish. But if I look at the pattern that is forming out here, we have a red candle and then we have a green candle. If Bluebird takes overall sentiments and it forgets the news of equity dilution, then we have a chance that we could form a Morningstar pattern out here, and it could be a trend change, and then we have a chance of breaking through this resistance of 6.44. We'll see what happens on Monday. Illumina was up 4.08% on Friday, and the MACD is looking slightly better. It's bullish, and the momentum is also improved a little bit from Thursday. And it has come to just about average and slightly above average. So I'm a bit hopeful that we will try to move upwards and test the resistance at 208.37 with Illumina. CRISPR Therapeutics was up 4.07% on Friday. That has converted the resistance at 47.93 into a support. So that's again a positive. Momentum is above average and it needs to pick up further. MACD is also bullish. So overall, it is looking good for CRISPR for Monday. Verve Therapeutics was up 3.70% on Friday, and it has converted one of the resistance. But the resistance at 22.47 still remains. So I'm going to mark it red. And our resistance at 20.82 has converted into a support. MACD is tending towards the signal line in a bearish manner. And momentum is just above average. We'll have to see what happens on Monday. I don't know what's going to happen on Monday. I hope it turns out to be positive, or at least stays above the support of 20.82. Editas was up 3.07% on Friday. Again, there's a chance for Editas to form a trend reversal pattern with a Morningstar. We'll have to see what happens. But if I look at the MACD and the momentum, I'm not very encouraged. And I'm looking at support from the diagonal line of support of the bear channel out here. If you look at Allogene, it was up 2.83% on Friday, and it has kind of converted the resistance at 6.53 into a support just barely, and I'm going to mark it as a support. I'm also going to convert this line into something thicker so that you can see on a smaller device. So that is the line which we have here, and it's at 6.53 and we're at 6.55, so that's a very, very marginal support. MACD is bullish, but momentum does not seem encouraging. And if I also look at Intelia was up 1.65% on Friday. It's looking very weak on the charts. I don't hope too much for it right now. Caribou Biosciences was up 1.59% on Friday, and MACD is just tending towards the signal line to become bearish. Momentum is also below average and weak. I'm not very enthused about Caribou. And if I also look at SQZ Biotech, it was up 0.63% on Friday, but all indicators are very weak. I can't see it moving up. PACB was neutral on Friday to end the day, and if I look at the MACD, it was bullish, and momentum was just past shooting the overheat position of 70%. So it has come down. The RSI has cooled down, and it's gone flat. So I'm hopeful that we pick up a little bit for PACB on Monday. DNA was down 0.60% on Friday, and momentum is looking very weak. And MACD also is tending towards a signal line in a bearish manner. So I don't hope much for DNA. It's going to lose more. And if you look at Fate, it was down 3.18% on Friday. Fate has a very bad fate, I would say. It's looking very weak on the charts. So I'm going to, say that Fate is not doing great. Now, with that, I bring my technical to an end. So that kind of summarizes today's session. So the highlights for me today is that I'm going to be very curious to see what happens with the new CPI calculations and how the Fed is going to react to it. And it's definitely going to show the inflation situation or the CPI to be much rosier than it is. And that would mean that the Fed doesn't have an excuse to be more hawkish. So it will have to be dovish. And how does that impact the market? Are we looking at an excuse to go bullish again? Are the indices going to turn bullish? And are we going to come out of the big bear channel that we have been locked in for a long time? Is the party about to start? So that's what I'm keen about. I would like to hear from you guys what you guys think. And it will be a two-way communications then. And I always read all of your comments. I respond to all of your comments. And your comment guides me in the content for this channel. So if you have taken the time to watch this channel, first of all, please subscribe. If you have not done that, please comment, at least press a like out there. Let me know that you're there, you're watching it, and I have some reaction on you. Thanks and have a great day. Bye for now.